Okay, welcome to the third episode of FSOKX Business Insights podcast. I'm your host, Joe Rossi, Principal, Turtle Bay Advisory Services. And as part of our 2022 commitment to our partners, our clients, and the financial services industry at large, we're continuing to bring together subject matter experts, principals in the field of financial services. And this podcast, I'm happy to say, is a little bit of a switch, focused on the mortgage industry. And today, I'm very happy to introduce Rob Crane, CEO of Down Payment Resources, uh, who brings us a revolutionary database that changes the support we give individuals looking for payment assistance for their first mortgages. So, Rob, we're very excited to have you here. Let me start out with a couple of observations. First of all, you bring me back to my days at Freddie Mac, and I always thought it was rather noble and patriotic in the sense that we helped Americans fulfill their American dream by providing affordable home assistance through mortgages. And somewhat, even though we've known each other for quite a long time, um, I've always thought you've done more than create a business. You've served the country. So that might sound a little corny, but I really believe that. Um, Rob, when I do our research, and we have kind of a brain trust in the background over here. So the brain trust came back and said, couple observations. Most people have the misconception that they need a 20% down payment in order to make that first home purchase. Our research tells us that actually that's not the case. On average, the down payment for any first-time home buyer is a lot lower than that. What they do is they gather up assistance, maybe through relatives, through friends, through other means, in order to gather up enough money to make that first down payment. I will make another observation here. Um, in this inflationary period, it's become obvious that it's harder to make that first home purchase, isn't it? And that a service like yours is even that much more important. Some of the data that's coming across is telling us that, um, three things are kind of coming together. One is the inflationary price of home valuations. Number two, um, the shrinking inventories, making it hard to find a home. And finally, the mortgage rates. I just noticed that the mortgage rates for residential homes are practically doubled in a year. So, with all of that said, maybe give us a little background. How did you get started with the work, and describe what down payment resources are actually doing for your clients?
Well, sure. And Joe, thank you very much for having me. I'm excited to be here. I appreciate this opportunity to talk with you and talk with your audience about these issues. And as far as being patriotic and corny, that's fine with me because I believe in that American dream too. I've been around the housing industry in one form or another all my adult life. So, but thank you for having me. Uh, so, as I said, I've been around the housing industry all my life and was a real estate broker, managing agents for 15 years, and then a mortgage banker for 20 years. And so I was always aware that there was a thing called down payment assistance and that there was a lot of money out there. Uh, but it was very fragmented in terms of how it's delivered because you've got so many different kinds of programs, different rules, a lack of standardization, different agencies providing and funding these programs. So, really, just as a practitioner, for years, I just kind of shook my head and said, there's got to be a better way to organize this and to present it and to make it easier from a real estate professional's and a lender's point of view, make it easier to apply to your customers, but also easier for consumers to find it, understand it, and all that. So it's just in a sense, you could say it's a classic case of be careful what you wish for, because if you say something enough times, somebody's going to say, "All right, fine, you go do it," and because I had no intentions of doing it, but that's honestly just how it started. I was not an entrepreneur. It's my first startup venture, late in life, and not a background in technology either. It's just trying to serve a need for consumers and for the industry.
And it sounds like you've been successful here too, and through at least a couple of services that you're providing. Maybe you give us a little bit of a high level description of what services are actually delivered.
Yeah, so at the heart or at the core of Down Payment Resource is a database. It's the only database of its kind today that has information about all kinds of home buyer assistance programs. So there are over roughly 2,200 programs across the country that we track. About 75% of those programs are some type of down payment and closing cost help. The other types of programs are affordable first mortgages available through state housing finance agencies, mortgage credit certificates where they're available. And then there's really about 12 categories of programs, but the majority is down payment help. And as you pointed out earlier, coming up with a down payment is cited as most people's biggest challenge in getting into home ownership. There were some statistics. I think Adam Data put out some data that uh, the median or down payment on a median priced home is about $26,000. Yet then the Federal Reserve says that the median amount of money in savings accounts is about $5,300. So I think those numbers kind of illustrate the gap instantly. So, and then again, as you pointed out, this hyper competitive market caused by a shortage of inventory has disproportionately impacted first time home buyers, low to moderate income home
Yeah,
buyers. Uh,
yeah, I agree. And I
so
just again,
it's
looking at some of the data, National Association of Realtors is saying that um, really the affordability of housing now is compared to even last year. It was, down considerably. Home ownership affordability index is down about 11%. So making it that much harder for that first time home buyer to actually achieve the dream. Um,
it is, yeah, absolutely.
when our family looked for our first home, we needed a lot of help, and we got some advice from brokers, from people that we know. So my sense is that it's not easy to deliver the message that there is that type of assistance. How do you work? How do you get your message through to the marketplace?
Yeah, so originally being a startup back in 2008 and being self-funded and bootstrapped, we didn't have the money to build an audience to reach the number of people that can be served by this. So our strategy and tactics was to work through partnerships. And when we started in 2008, had a couple of key markets in mind. And somebody wisely pointed out to me, you can't go after all three or four of them at once. So pick one. And the obvious one was lenders, and actually lenders in the GSEs. My first sales call in May of 2008 was with Fannie Mae to talk about integrating this information into Desktop Underwriter. And but that was 2008, and we all know what happened in 2008, the meltdown, and it just was not a good time to be selling a new product to lenders because they were just they had so much else going on. Our secondary market, we did sort of the classic startup pivot. It's almost a cliche. Every startup thinks they're going in one direction, then they pivot. So we pivoted to our secondary market, which was the real estate point of sale. Again, going back to your point, consumers don't know this information is available, but by that time, uh, most people started their home search online, Zillow.com, Realtor.com, and the other search sites. So we figured out, okay, the household has to be eligible and qualify for these programs. but the property is a component that determines eligibility because these programs typically have a maximum sales price. Uh, the location is very specific because these programs all have different geographic boundaries. So we figured, okay, let's figure out which homes for sale would be eligible for any of these programs and which programs they'd be eligible for, and put a message online. So when you're searching online, you see a home that you like or it looks interesting, you click on the listing details page and you go through all the tools and widgets that they have on that page to tell you what are the taxes, what would my mortgage payments be with different down payments, all those tools. And so we thought there's not a better place to put a message that down payment money is available for this home. See if you're eligible and answer 6 or 7 questions. And you can, so now you can search for a home and find a down payment to go with it. And that's literally 14 years later, what's happening now through our partnership with Zillow. And it'll be coming to other search sites. But that's literally what you can do on Zillow today. A consumer clicks on a listing details page. As they go through the tools, they scroll through the tools available on that property. And if it's eligible for programs, there's a down payment assistance module. It says this home is eligible for 6 programs or 8 programs, whatever the number is. What's the maximum dollar amount based on those programs? And that consumer instantly can get information about those programs and where to go find the money. And then again, if they want to, they can answer up to 7 questions about their household and really get tailored results to see if I buy this home, what does it look like I'm eligible for in the way of money?
You know, I I'm betting that you have a great war story associated with this. Um, can you tell us a story of a success, someone who's achieved the goals that you set out?
Yeah, we've certainly heard a bunch of them, and it's very very gratifying because we don't, we're sort of technology and information in the background. We don't get to see all the ultimate outcome. We hear about it anecdotally, but I love this story because it really encapsulates the heart of the matter. And there's a real estate broker. He owns a Remax company or Remax office, Palm Realty in Port Charlotte, Florida. His name is Peter Rivera, and he had access to our tools through his MLS when they started licensing it now 11 years ago. A single mom comes to his office, wants to buy a home. She's a mother of 2 daughters. She wants them to each have their own bedroom for the first time ever, and just she knows the benefits of home ownership. So they start talking about it. She had seen some homes that she kind of knew where she wanted to live based on school district and things like that, and just looking for a starter home. So uh, they started talking about she was asking Peter, what do how do I get into this home? Of course, it's a subject of down payment comes up. Peter calculates that she's going to need about $7,500 to get into that home. And she said, well, I don't have that much in my savings account. And so he worked with her. They calculated, okay, they talked about her budget and figured out how much can she save every month. And it was going to take about 4 years for her to come up with $7,500. But she was motivated, and she said, all right, I'm going home now. I'm going to start saving, and I'll see you in a few years. And Peter said, well, wait a minute. Have you ever heard of this thing called down payment assistance? And she said, no, what's that? He explained it to her. He used our matching tool. And the whole idea is you take all this complicated information about qualifying and eligibility and you automate it so you can match a buyer, a property, and the programs that are available. And they found a program. She was able to buy the home then. And guess how much equity she had in 4 years when she would have been back with her
Tell us.
$7,500? About $70,000, which says 2 things, right? It says if I waited, that's a moving target. I'm never going to catch up to it. If I waited 4 years, the house would have been worth 70,000 more, my $7,500. But the other thing is, if it was going to take her 4 years to save $7,500, how could she have possibly, how else could she possibly come up with $70,000 in equity or $70,000 in liquidity in
Mhm.
that period of time. It just tells the whole story.
It's a great story. Thank you for that, Rob. So, one question that kind of nags at me is it would seem to me that more people should be utilizing your service, and more people should be reaching out to take advantage of the programs that are out there, the 2000 programs that are 2000 plus programs that are available to them. Why isn't that happening?
Well, first of all, I agree with you 110% that everybody should be using our product naturally. What else would I say? But uh, it's a great question. I get that question asked probably more than any other question because it seems like such a no-brainer and it seems so obvious. And there are a couple of different answers to it. One major answer is that this does add a layer of complexity to a transaction. And these days we have our phone. Our phone is a remote control. We push a button and we can get anything when we push a button on our phone. Uh, you know, push a phone, get an Uber. Push a phone, get takeout delivered. Push a button on your phone, get takeout delivery. Uh, Push button, get mortgage. That was a big ad campaign a few years ago. So, with such an emphasis on speed and automation and technology, uh, this just, like I said, it adds a layer of complexity. Now, I will say it's not. Sometimes the perception is worse than the reality of it. But from a lender's point of view, why would a lender not want to do it? Lenders have to make a conscious decision and a commitment to participating in these programs. Depends on the type of programs they want to offer, but they're basically adding more products to their product suite. So that impacts the whole assembly line because we know in the mortgage business they manufacture mortgages, so you have an assembly line. So those are some of the considerations. Uh, uh, and just where at what level of commitment has any given organization put on offering this? I can tell you, we definitely see, especially the last couple of years, we're getting more and more interest from lenders. There are lenders that have offered these programs for years. Some of them are our customers. In fact, we just looked the other day and just signed a big customer, and now we have 5 of the top 10 mortgage lenders in the country, and a lot of others that aren't as big but still significant lenders, and even credit unions. So there's a lot more interest in it, and we're hearing from lenders that have historically not offered these programs for some of the reasons I mentioned, and now they kind of coming to the conclusion that they really need to. It may be a bank who needs to beef up their CRA. Uh, uh, it's addressing the affordability crisis, which is not getting any better and probably won't get any better. So, and then you think about the millennial generation, the biggest cohort in history, and they're just at the leading edge, or the older part of that generation is at the leading edge of the household formation years. So, there's tide is definitely turning.
Rob, I will tell you, I have a millennial colleague of mine sitting across from me. She's shaking her head vigorously.
I
Yeah,
can
yeah.
imagine.
So I think you answered my final question. Was really given these economic, where we are from the economy, it would seem there'll be more pressure on first-time home buyers, and therefore more interest in making home affordable uh, with the major providers of mortgages, banks, and mortgage companies. Are you seeing your phone ring more often these days?
Yeah, absolutely. No question about that. So just more interested in it. And, it doesn't hurt. I talked about the Zillow partnership, and what we do on Zillow, we've been doing for 10 or 12 years for multiple listing services. It's just that somebody like Zillow has a
Has greater
huge,
reach.
huge audience. And, we're finding it's pretty staggering. they're ecstatic about the level of engagement they're getting by having this information on their site. Uh, but we're seeing about 200 over 200,000 engagements a month. No, let me put that on the cutting room floor.
Not
Um,
a problem.
on on Zillow, we're seeing over 200,000 engagements of one type or another a day.
Wow.
So that's over 5 million a month. Now, they may not all be they may not be all home buyers, and that's not unique visitors. So maybe one person is pushing the button 5 million times a month, but I think it's somewhere in between.
Well, Rob, I think you're on the right trajectory, and I think you've got the right set of products. I think you're offering a very important service to the country and to uh, home buyers in general. So I'm anxious. We're going to keep track of you, and we'll see how well you do and report back to our audience. And for the audience, if you need more information, the podcast will be flashing our contact information and our websites to find out more information about down payment resources and Rob Crane's continuing journey. Rob, thank you very much for your time and wish you all the best.
Thank you, Joe. I appreciate your support. I appreciate this opportunity, and it's great talking
Take
with you.
care.